Howdy, Jacob here. Today we're looking at the company ALRM.com Holdings in the software industry. 3.4 billion market cap on 3.2 billion enterprise value. They provide various Internet of Things and solutions for residential, multifamily, small business, and enterprise commercial markets. They were founded in 2000 and had very substantial growth until recently. CAGR was about low 20s for about 8 years, but last 2 years, year-over-year growth of about 12% and 4.6%. Gross margin, though, is pretty consistent. You're looking at about 60% there. Operating margin down a little bit from 10 years ago, but upper single digits, so not terrible. Return on invested capital in the mid to high single digits. That has been going down, which is a bummer. Balance sheet shows 697 million cash on hand and 494 million long-term debt, no short-term debt, so they can write off all their debt. Not concerned with that. Cash flow shows pretty low capital expenditure, so it doesn't really take a lot to keep the business going and everything. And their use of cash has consistently been, or has historically been, mainly share repurchases, acquisitions, a tiny bit of investments through both tangible and intangible, and that's really it. So haven't really paid a dividend. They don't really buy back a lot of their debt, but they do buy back a lot of shares and make quite a bit of acquisitions with their free cash flow. So let's start making some assumptions here on the revenue change, revenue growth side. It has been going down quite a bit. Do we know if that's the new norm? Not necessarily, but for me being fairly conservative, I will say maybe 16 there. Let's do roughly in line with the market average based on their growth at the end of 7 years and their, mode status. So let's just do 9 and 10. Share change relatively flat. So they have been buying back shares, but they do issue about 47 million aggregate, at least in the most recent year. So I think that they'll make enough to really just offset that, and then the rest of their money will go towards reinvestment and acquisition to get this type of return and these types of margins. And from these assumptions, it does look a little bit expensive at this price point, but from a business perspective, I do think it looks like a solid business. Not the best I've ever seen, but definitely one that would be interesting to own, but just not at this price for me. But I hope you enjoyed the video. Have a great rest of your day. Thank you.